Hello and welcome to Chart of the Day Cafe for Tuesday, March 20th, 2018. Read our disclaimer quickly. Trading stocks is a high level of risk and viewers should complete their own due diligence on any stock or underlying that they intend to own. 100% of the content of this video and communique is intended for journalistic and educational purposes only. This video and all indicators, strategies, and articles herein should not be construed as investment advice. Not making any recommendations, always for your further homework. Good morning, Sue here on this first day of spring, I believe, 2018. Such a welcome day. I love the warmer weather. Other notable events this week, the new Fed chair in the US, Jerome Powell, is starting a series of two-day meetings tomorrow and the next day, so he will make an announcement or remarks regarding interest rates. The market will no doubt be hanging on his every word with respect to that, so always good to know. Anyway, with that, let's get into today's video. If you're a regular viewer, then you know I always start my videos off with a look at the Russell Index, and for that I use the IWM, which is the ETF that represents the Russell 2000, and I like to step back and take a look at it on a 5-year monthly time frame. I've taken away all my drawings because I want you to see the candle so far for the month of March has a bullish orientation. I think we have 9 trading days left in the month, so we'll see how this candle shapes up in the end, but it's up and over the blue. We want to look at it with respect to January's candle, which was strong until the last week when all that selling came in and brought us to that February low. We struggled again in that area, as we were saying in our videos last week, that might happen. So we're at an interesting area here. I'll be watching very carefully to see how the market reacts in this area. I'm going to put my drawings back in, and it will get a little more cluttered, but we've been keeping an eye on these lines. The blue down here, I'm kind of ignoring for now. It's long-term support resistance. The orange as well, medium, and it's really the pink line and this black diagonal line that I have in play on my charts that are most important. And if I had to pick one, it would be this one would be the absolute most important. Why? Because this black line held price in through all of 2017. You can see these candles were corralled by the orange and the black. And then in the latter part of 2017, we broke higher. We stayed there until February, where price bled below, again in March. So I want to see if this uptrend is going to indeed continue. I want to see price in the Russell move back up and over my black trend line. So that's the 5-year monthly. Let's look at the 2-year weekly, get a better perspective on things. So same orange line, same black diagonal line, same pink line. We are up and over the black, and we're trading in this wedge pattern. I'm going to put a little line in here on the weekly, and I'm going to say, look, if this uptrend is going to continue, then price on the Russell is going to have to break through this wedge. So that's the weekly look. Now let's take a look at the daily look. Let's go 9-month daily. So we had that soft day yesterday, but look, price recovered and we created a long wick. And so this is a very interesting area. I'm sure it will be very much influenced by what Jerome Powell says tomorrow and the next day, but worth keeping an eye on this area for sure. So according to my rules, the way I do things, if price on the Russell is trading below, it closes below the 8-day EMA on the daily chart, I'm not putting any new charts for it. I'm going to zoom in a little bit so you can see that a bit better. When it trades below or closes below this blue line, which is the 8-day EMA, I'm being cautious. I'm not adding new names to my watch list, but because we had that long wick and because we're in an overall uptrend, I'm going to highlight 2 past Chart of the Day Cafe picks that might be interesting in this area. Should price on the Russell recover in the days to come and move up and over our black diagonal line. And so the first one I wanted to highlight for you is Chemours Company. It's in the chemical space. It's ticker symbol CC. We featured it, or I featured it, I should say, on January 11th. And you know me, I'm all about value and growth. So all of the charts I feature on my video series have really great fundamental scores underneath them. So we featured it on this day. It had this little bit of lift from there, but then fell off with the sell-off that everyone incurred in January, February. It's recovered. It's sitting at this area of support. Should the markets move higher from here, I would expect some lift in this one, and we'll be keeping an eye on it. I always say everyone has their own way of doing things. For me, I like to see the pink, which is the 3-day EMA, cross over the blue with a nice bullish candle at support. So I'll be looking for that on ChemWars. I went and took a look at the scores again this morning to update them for you, and it's got that value score I look for, which is super high, a current forecasted earnings growth rate going forward of 34%, a dividend yield of 1.37%, and a current PE of 9.54. So low PE, dividend, growth, and earnings, like that combination. The second one is DXC, which we featured recently on March 6th, Green Circle Day, expecting a move up and over the blue. We got that move, and considering how this is in the technology space, by the way, considering how soft technology's been, that was a nice candle to see yesterday. This is a very strong stock. And as I mentioned, you can go back and watch my original videos on these two. If I remember correctly, sky is blue. There's no overhead resistance on this one. So even though it's been in a tremendous uptrend, the value score is still really high on DXC. And it's got a forecasted earnings growth rate going forward of 45%, a current dividend yield of 0.69%, and a PE of 14.44. So keep an eye should the markets have a strong next couple of days. I like the look of this chart and the way it's shaping up right here. Short video today with the Russell closing below that 8-day EMA. Going to be extra careful. As a reminder, these videos go out every Tuesday and Thursday, so look for my next one this coming Thursday. Thanks everyone, and have a great next couple of days.